Hi guys, what's happening? I hope you had a great day today in the market. Got a little something different today. I get these questions all the time, and I kind of group these together because I'm going to answer all of them or tell you how to overcome all of these using one simple strategy. And it's something that I know you've heard before, that you've heard over and over and over again from other people, but maybe it didn't resonate with you or it didn't connect at that time. So, hopefully we're going to try this again and see if this kind of connects with you. But these questions, why do I get stopped out early? Oftentimes, and one of the biggest frustrations that traders have in the community is we're in the same trade. We're pretty much trading the same setup. They get stopped out and I don't, and the trade works. Okay, there's a reason for that. Why can't I respect my stop? Where you can't, why you don't allow the trade to work or you don't take it off. The trade gets away from you. You don't respect your stop and you just leave it on because you don't want to take the loss. Why do I take my trades off too soon? You may have been red in the trade, then you turn green and it starts to go back again and you just take it off because you don't want to go back red. Or why do you hesitate to even enter a trade and you end up missing entries? We can all connect these to one simple concept. That's fear. We talked about it last week. The fear of losing money. You have your stop set too tight because you don't want to lose a whole lot of money. You don't want to respect your stop. You don't want to take it off. You want to wait for it to come back so you don't take a big loss. Why do you trade and take your trades off too soon? We just talked about that. You don't want it to go back. You might have been red, then you went green. You don't want to go back red, so you take it off. Or you get a little bit of green, and it's like, hey, I'm going to take $50. You're watching your P&L, obviously. Or why do you hesitate to enter a trade? All of these are centered around fear, the fear of losing money. You don't want to enter a trade because you think you're going to lose money. All right, so the solution that I have, and I dealt with all of this. The solution that I have is planning. It's time to start planning your trades. Okay, that's the key. Having a solid trade plan before you take in a trade is just like having a map or nowadays a GPS before you start to travel. Would you take a long trip really, without knowing how to get where you're going? Everybody hop in the car and we'll figure it out as we go. No, most of the time you're gonna pull up that GPS or you're gonna go on Google Maps on your computer and see where you're going in relation to where you are and how you need to get there. So that GPS is gonna show you where you are now and how to get to where you're going. Now the beautiful thing is, a lot of these will give you a choice between 2 and 3 different routes. And you have to choose the one that you feel the best. Do you mind going a little bit out of the way to save 2 or 3 minutes? Or do you want to go through the heart and maybe run into some traffic, but it's shorter? Or do you want to go all the way around the outside, take some side roads and get there? Most of the time, you're going to have that option. And it seems like in trading, we have that option too. We always have different paths we can follow. But the main thing is, whatever path you follow, you need to have a roadmap to get there, a GPS plan, something to get there. So trading the market without some type of plan even if you have experience in trading in a simulator or paper trading or whatever, it's going to be challenging once you put your money on the line. Emotions are going to change. And so you have to be ready for that. And in a way to kind of eliminate some of that, a lot of that stress, is having a plan, having it already planned out, having confidence in the fact that these plans work more times than they don't, and that over a period of time you will make money. Then you're not so much worried about losing money on this trade or losing money on that trade. You know at the end of the day, at the end of the month, you're going to be profitable. Okay? Because it allows you to be in a position that once you gain some experience, to be able to kind of manage that trade plan a little bit based on what you see later on in the market. We know the market can change its tune at any moment. And if we don't have the experience to work with that, then yeah, we need to get out and wait until we gain that experience to be able to make adjustments. But if you don't have a plan, what are you going to adjust from? But the main advantage of having an objective and well thought out trading plan, it gives you the opportunity to trade objectively, where you're not wrapped up in being right or wrong. Your focus is just on executing that plan. See, that's where this fear creeps in. It's about right and wrong again. Nobody wants to be wrong. Everybody wants to be right all the time. And you can't come into trading with that. What you want to do and the skill that you want to develop and what you want to feel the best about is how consistent can you execute your trade plan. Number one, you got to have a trade plan, and then you got to execute it in the market with some consistency. If you don't, it's going to create some problems, and it's going to hurt your profitability. All right, so I just wanted to share that with you. And here's an idea, and this is what I did. Okay. Now, before I show you that, I want to tell you what a good trading plan has is something that allows you to identify your goals, organize your technical research or trading activities, like where is your technical stop, where are your profit targets, decide when and how to execute the trade, and that's based on the strategy. Like an opening range trade, you're going to execute on the break of the opening range high, the opening range low. And it helps you manage those emotions because all you're doing is focusing on hitting targets. It doesn't matter whether your target's the stop or the profit target. All your job is to execute and hit those targets. That's all your job is going to be. So those emotions are really gone out the window. So if you don't have a plan, it's going to be hard because the market does not play favorites. And it's equally forgiving to you as a small time trader and the big time fund traders, investment banks. Those guys get blown up too. Not too often, but if the market is not in their favor and they want to be stubborn and they don't have a plan, it can be detrimental to them. And it happens. So those that don't have a good plan typically don't survive. And the plan is not mirror trading whoever you're following. That doesn't last long. That allows fear to continue to dwell inside you. And you'll never be able to break off on your own and be your own trader. So this is a note card that I used when I was first starting to trade. I had a problem of, number one, putting a plan together. I just thought I'm going to enter in a trade, and then when I felt like I was making enough money, I'd take it off. But you can't do that. You got to have a strategy first. So I would write down the strategy. I write down what ticker I was looking at. The entry price, I couldn't write that down until later. But I would know the position size based on how the stock was trading, based on the price. I already knew what my position size was. I knew before the trade how much room I needed to give it. I knew what I was going to risk. And if I was going to risk, say if I was going to risk $300 and I was going in 300 shares, I knew I'm going to risk $1. So my hard stop has to be $1. But the way I figure it out is I use the ATR of the previous 6 candles. That's going to give me an idea of the normal swing of the stock. Because if the normal swing of the last 6 candles was $1.23, like we're going to look at an example from today, $1.23, and you put your stop at 50 cents, you got stopped out. And you will get stopped out before the move happened. Now, in this case, the stop we're going to look at today, I had my stop right, but it just moved farther against me. It's just that opening volatility, we just got ate up in it. But if you stick to understanding how much room you have to give the stock, you're not going to get stopped out too soon. Okay, you're going to, most of the time, have enough room to allow that trade to actually work. The technical stop is basically what are you basing the trade off of. So, and I write this down as much as I can within the first, 5 minutes. I let the first couple of minutes, usually after 3 minutes, you have a good idea of where the stock is going and where your potential profit targets are going to be. You don't have to write them down until after you get in the trade, because sometimes the trade could be looking short and then it turns around and triggers long. So you don't want to write your profit targets down until you actually get in the trade, but you want to have those targets identified, whether you're going to scale out or whether you have one final target here and one stop here. You're going to know where those levels are, so that when it's time to get in the trade, it triggers an entry. You're not worrying about being right or wrong. All your focus is making sure you hit your marks. If it hits your profit target, you make sure you hit it. If it hits your stop, you make sure you hit it, take it off. And grade yourself accordingly. It's not about how much money you make on a trade. It's about how well you planned it and how well you executed it. If you have a solid plan and you executed it perfectly, but the market just didn't work with that was set up that time, that's fine. Move on. Don't change up your trade plan. Be consistent with it. Now, over a period of a month, if your trade plans just haven't been producing, that's when you take time, start back testing, look at your notes, look at your reflection, and try to pinpoint what may be going wrong. Okay, and then also that's where mentoring comes in, where we could sit down together and figure out, hey, where's the disconnect? And then we try to go through and connect the dots. But I know it seems like it takes time to do this, and it does. But some of you guys really need to slow the hell down. You're trying to get through this too fast, and that only gets you to zero faster. So just take your time and plan out every trade. Know where your stop's going to be. Know where your target profit's going to be. And that way you can tell whether the trade actually makes sense. If your stop has to be $1.50 and you only see 50 cents, 75 cents profit potential before you hit a level, that doesn't make sense. And so by going through the planning process, you just eliminated a potentially losing trade. And that's why it's important to do that. But just wanted to share that with you real quick. There are a lot of other strategies to deal with fear. But this is one that if you do it correctly and you focus on the right things, you're not going to have trouble getting stopped out too early. You're going to know exactly where to put your stop. You will respect it because you know exactly where the trade is technically going to fail. And if it breaks that technical level, you're out. And you won't be taking your trades off too soon. You're going to trust the technicals, trust the market, and you won't be scared to take trades because you already know what you're going to do. You're already going to have a plan. You won't be going in blind. All right, so that's my 2 cents on that. And we're going to go ahead and look at what we did today. Now, AAP, this is typically a good trader on low volume. I've seen this time and time again make really solid moves on low volume. So I didn't have a problem taking this trade because of the history. And I've traded it before. So we have the 5-minute opening range breakdown. Now this did jump down pretty quickly, and I was trying to wait for it to get back to get a little bit better entry on this. But still, this wasn't too bad. Got a nice entry. The problem was there was a level here at 156.69, I believe. At 156.69. And you can see it's not on this chart. What happened was I forgot to transfer that level over to this chart. Now I made sure I transferred my target and everything, but I completely forgot that 156.69 level, and that reacted at the open. Anytime you have a stock that's not trading a ton of volume, you better respect those levels because there's probably going to be enough people at those levels to react to the trade. So more than likely, that was a good profit target for some people, and it just took off. I ended up I had to respect my stop. Now, this one, when I averaged these candles, it was $1.23. So all I do is I have the average true range set to give me the ATR of the previous 6 candles. By default, it's 14. I changed it from 14 to 6, and it gives me that. And so it told me $1.23 should have been a really, a good, range. So I just added some to it and went to $1.50. So, okay, I'm going to give this trade $1.50. And it stopped me out. The volatility on this was a lot greater on the second candle than the first. Typically, you don't see that. But it does happen from time to time. And when it does, a lot of times we get caught. I got stopped out of this. Now, eventually, it did come down and make a little bit of the move. But this was untradeable today. And it's just really untradeable for me today. The volume was really surprisingly lower than what I thought it would be. So this really wasn't in play for me anymore. So just a mistake by not transferring. It happens sometimes. Not the first time that it happened to me, but I just waited too late. I guess I was rushing, trying to set these charts up right before the open, and just really forgot that level. So I can't say this was a failed ORB because it never should have been an entry with the support right there. So we moved on. TSN was another stock on my watch. It reported earnings. We had the big gap down, and then it came back, closed the gap to the downside, and then at the open we started moving up. So by the time we opened, this stock really didn't have a gap, didn't have a dollar gap anymore. It was pretty much even. So we had a nice 5-minute candle here, and where is it? I lost the visual. Hold on. Hang on one second, guys. So we had the big first candle right here. And, here was the initial break. So you could have gotten it on the initial break. It ran up almost a point. And then it sold off and came back. And because I had been in AAP, I missed the initial break. And I had to wait for the pullback. It pulled back far enough for me to get it and use the opening range as my level. We're still within 10 o'clock. You see, I got the trade at 9:52 before we got on the other side of 10 o'clock. So it was still an opening range trade. I used this as my technical stop. And what I mean by technical stop is if we get a candle to pull back and close below this level, technically my trade plan is dead. If we get a candle that trades below this and then gets bought back up over it, the technical level is still held. And so the trade is still alive. And what happens to a lot of people is if it dips down, they're gonna take it off. They're not gonna allow the trade to work. They just take it off because they think it's selling off and they don't want to lose any more money and all this. But you can't think that way. No, you can't think that way. You have to wait, give this time to test this level if it needed to. And if it held, you stay hooked on this trade. Now, a couple people that did take this ended up getting stopped out. They didn't have the proper stop in place. See, you have to make sure you give it enough room and you size in accordingly. If you have to give it $2, you're not going to want to, go in 300 shares if your max loss is going to be $150. Now, you can't do that. So your share size is going to have to reflect how much room you're giving it and all of that. So that's what in the day trading class, that's exactly what we talk about and try to get you to establish a technical level, but make sure that technical level is not outside of your max loss level. Because if the technical level is 60 cents away, no way you should put your stop 50 cents away, because it likely can test that level and then bounce off of it and work. And a lot of people, stops too tight inside the technical range and they get stopped out too quick. All right, but we will cover this in more detail in class tomorrow. We start the reversal class tomorrow, so we'll talk more in detail about it there, but just wanted to try to get you guys to understand, you're going to have to make sure that you're giving this stock enough room to work. All right, so here was the first trade. We got stopped out at break even here. Had one big run up and then pulled back, and then we bounced. We held a 5-minute opening range high. We got up over the 9. See, this candle closed above it. This candle, when we made a high, I grabbed it. And first target right here, that was the high, the previous high. It only makes sense to take some profit there, because obviously 1, 2, 3, 4, 5 candles, 30 minutes we sat around this level. 30 minutes. So you know this was a significant level. Only made sense to take profit here, because you don't know whether this is just going to give up and pull all the way back, or if we were going to pop. So always take profit. And I hit my midway point target, took some more profit here. This is my final target. And we held out. And we got here coming in to 3 o'clock here. And we made this big run up. And based on what I've been seeing, I'm like, I better take some profit here. So this was an adjustment I made. My target was here. But an adjustment I made was, look, we had these 4 solid candles up. We're probably going to get a deep pullback, because we haven't done this since, back over here. And I took some off, and it turns out we ended up getting the final target. So I did keep some on, so I did get the final target. But this was just an adjustment I made to make sure I locked in more profit. And that was the TSN trade. This was a trend continuation, textbook, just like we talk about in the class. You can't go wrong with it. I guess you can say this is a textbook opening range breakout. We couldn't buy the break. We had to wait for the pullback to buy off that 5-minute opening range. So still a 5-minute opening range breakout trade. Instead of buying on a break, we just had to wait for the pullback. A lot of times, if you miss the initial move, if you just exercise a little bit of patience, you're going to catch the bounce. All right. So we ended up today 412.86. You can see AAP, we lost 371.81. That's about right, based on my stop. So we managed that loss, and it allowed us to make money. So on TSN, we ended up 814.16. Again, I mean, we traded 500 shares, then we broke it on this. You can see it was a $80-$90 stock, so was great. Normally I would trade 300 in a smaller account, but only boosted it up 200 shares, and you can see it doesn't take much. It doesn't take much to have a really, really good day. So that was it on the day trading side. On ACAD, you saw this is the swing we got in yesterday. And it hit our target, 47.50. This is all one order. You know how sometimes the way the orders get sent out, it just gets matched up with another order sitting out there. So this is kind of how it actually hit 3 separate orders. But I see this more with IV than I do with Speed Trader. But that's why we've only got 1 ticket. But these are 3 executions, but it's all part of 1 ticket. That's why you see 3 trades and then 1 ticket, because all 3 of these were part of the same ticket. And you only get charged once. Okay? That negative $1, that's the rebate. That's, if you add liquidity to the market, you're going to get a rebate. So they actually pay you to trade. Yeah, you never would see this in SureTrader or, anything like that. Any small account brokers, they don't do this. So this practically took $1 off of that, made commissions 95 cents. And then you got the FINRA and SEC, but those are pennies. So not bad. We locked in 2078.50. So not bad on this deal. The only problem is this thing pulled all the way back. The market sold off, so I think that kind of hurt it a little bit. But looking for this to continue on tomorrow. Now my stop tomorrow definitely is going to be break even. So if we pull back, my entry price at 43.34, that's going to be my stop. All right, so we're still 3 points away from it, but it'll be fine. No, we got 4 points on this today. We're looking for 50, the whole $1.50. That's my final target on this, and that's where I expect it to pull back, but we'll see going forward. All right, so that's going to do it for me today. You guys have a great night and evening, and I will see you in the morning.